Is Cleanspark really undervalued? Well, in this video, I want to share my thoughts on their most recent earnings report and conference call, as well as share what moves I'll be making with this company. But I don't want to waste your time, so let's go ahead and dive right in. So for a quick recap, Cleanspark's goal was to be a top 5 North American Bitcoin miner in the following categories: hash rate, efficiency, sustainability, and profitability. Hash rate is the computing power and a metric used to help determine how many Bitcoins are mined. Efficiency is where you take the power cost and divide it by the hash rate. Sustainability is the category primarily focused on renewable energy, as well as renewable energy credits to offset any non-renewable sources of energy. And lastly, profitability, which includes net income and adjusted EBITDA. Cleanspark is already one of the most efficient and sustainable Bitcoin mining companies, and when you remove Core Scientific with all the issues they have going on, Cleanspark is at the top in terms of the amount of Bitcoin mined in a month. They already have the framework to succeed and have proved this over the last year, raising their guidance tremendously, going from 4 exahash to now expecting to achieve 6 exahash by the end of the year. And it is from this execution that I like their growth potential moving forward. But let's talk about the actual numbers. Now, I do want to mention that a lot of this hash rate is not going to be included for this earnings report, which is already going to look strange because this is their Q4 numbers and not Q3 like many other companies. So their 2023 numbers are probably going to look much better, assuming Bitcoin doesn't fall further. But for this earnings report, they went from 2.8 exahash to over 4 exahash by the end of September. This is a significant improvement from what we saw in the previous quarter, where they went from 2.4 exahash to 2.8 exahash. Within that time, they only mined 964 Bitcoin, whereas this quarter, they mined over 1,200 Bitcoin. But the other thing to consider is that Bitcoin prices have been around the $20,000 range for the last 6 months, although we have fallen even more over the past couple of months. Now, why is this important? Well, the previous quarter, they were able to have higher Bitcoin prices, which is why many people expected the company to have less revenue this quarter. And it definitely was the case. Cleanspark only produced $26.2 million in revenue, which was slightly better than the $25 million that analysts expected. I think the biggest take out of all of this is the amount of Bitcoin that they actually mined. But I also think it's important to know that the amount of revenue generated this past year was an increase of 235% from the previous year. So putting it into perspective, even though this quarter's revenue wasn't great, they have had a drastic increase over the past year. Now, one thing that sent the stock on a massive downward move right after the earnings was their huge net loss. The company had a net loss of $42.3 million, which was an increase of 683% compared to last year. The team said that the loss is primarily due to impairment of goodwill and Bitcoin balances, as well as modification of equity instruments. So yes, the company's net loss is not good, but the business still performed well despite the crypto winter that we're in. And this is why I think the more appropriate measurement is adjusted EBITDA. Even with lower margins, they were still able to generate a positive adjusted EBITDA of $2.9 million. So while Bitcoin remains low, their overall business still continues to perform, which is nice to see. Now let's look at the balance sheet, because I think for some people this could be a caution flag. They currently have just over $20 million in cash, which may not seem like much, but we need to consider that this is not their main currency for their business. They use Bitcoin, and because Bitcoin prices are much lower than last year, their Bitcoin value got cut in half year over year. However, they still have significantly low liabilities and only $21 million in debt. But despite a smaller balance sheet, they have still been able to execute on expanding their Bitcoin mining services. Now, there is one thing that I need to mention that is important, and that is the news about the Lancium contract. It was announced that there will be major delays to where they won't be able to get value from this contract until late 2023 and possibly 2024. This was a significant contract and was going to help Cleanspark achieve their hash rate guidance for 2023 of 22.4 exahash. But because of the delays, the management team had to reduce their guidance to only 16 exahash. And I talked about my worry with Lancium in the previous video, but what has to be said is that this is about Lancium's capital issues, not Cleanspark. And if we continue to see these issues, then the Lancium contract could be significantly reduced or removed altogether. And I personally think the removal of this contract should be considered, especially after all the issues that we have seen. Now, for me, this doesn't change the way that I view Cleanspark. And if I'm honest, I'm kind of pleased with this news. I mean, Bloomberg announced in July that the Texas power grid was near brink as the large Bitcoin miners have shut down because of high demands. And so not only are we seeing multiple companies struggle to have miners in Texas, but most of the issues that we are seeing with Bitcoin mining companies is in the co-location space. Now, I do think that Cleanspark recognizes this because in their previous conference call, they said we do expect to further expand our own wholly owned facilities beyond what we have done. One thing that the company has said is that they want to maintain holding wholly owned facilities for the future. And so even though this Lancium contract could have helped with scalability in 2023, this forces them to really focus on acquiring wholly owned facilities. And if you listen to this conference call, you will be able to hear the CEO's frustration when it comes to co-location. In fact, when someone asked about Cleanspark renting out their facility for other Bitcoin miners, his response: absolutely not. And what we saw over the past couple of years from these other Bitcoin miners is that many of them focused on acquiring as many miners as possible. But now we are seeing many of them struggle to actually put all their miners to work. It is important for Bitcoin mining companies to put more attention into infrastructure. If they don't have the space to plug in the miners, then those miners are likely to experience damage because they are inactive and are in storage. For Cleanspark, they not only have a healthy amount of Bitcoin miners to where they can plug in almost all of them, but they are constantly looking for more opportunities to obtain facilities. And what I think a lot of people aren't considering is the possible appreciation that could come from these facilities, especially after the economy returns to normal levels. As Cleanspark gets these facilities, they can rehab them. That way they increase the value of the property itself. Then when they go to refinance the property, they can take out cash from the property to put toward more facilities or miners. But in the current environment, miners are also at a discount. And as we begin to see Bitcoin prices increase, the mining assets will also increase. So I see tremendous opportunity for them on the real estate side of the business as well. Shifting gears, Cleanspark explains that there are 3 levers for financing their business. There is debt, dilution, and selling Bitcoin. Currently, they have chosen to get financing by debt and selling their Bitcoin, as these are the 2 lowest costs in their opinion. Now, I know that there are a lot of people that have said selling Bitcoin is not a good idea, but what else would they do? If someone is a Bitcoin mining investor or is thinking about getting into one of the Bitcoin mining companies, it needs to be known that Bitcoin, in a sense, is the product that Cleanspark sells for revenue. It's like if Tesla, during a market where new car prices appreciated, said, you know what, we're going to keep our cars instead of sell them because they will be worth more later. The issue is that selling cars is what makes their business run. If Cleanspark doesn't sell their Bitcoin, then they either have to dilute shareholders, which is what almost every other company has done, or they need debt, which will kill the balance sheet. Speaking of diluting shareholders, they did announce that they are making an at-the-market offering that allows them to sell up to $500 million in common stock. Now, this may sound bad, but we need to remember when Cleanspark goes to dilution. It is for acquisitions, and the team continued to say that they will only dilute to acquire companies or miners if the ROI or return on investment is greater than the dilution that they will experience. Because the management team has stock-based compensation, they don't want dilution either, because that means their compensation won't be as much. So personally, I trust that they will continue to dilute only for acquisitions, unless something drastic happens with Bitcoin or their business. And unless Bitcoin falls lower, I can't see this happening. As of right now, I believe that Cleanspark's valuation still doesn't make sense. They have total assets of $452 million and total liabilities of $48.6 million, which means that their total stockholder equity is $404 million. And what is the stock valued at? Under $100 million. So unless you see this stock going under, I don't see how someone could justify their current market cap. With that being said, I do believe regulation will actually help Bitcoin, but I also recognize that Bitcoin is only valuable because people give it value. And if there comes a point where people don't want Bitcoin, then the price will tumble even further than where they are right now. Personally, I don't think that there will ever be a time where people devalue Bitcoin, but that is still a risk to be recognized. And that is why I cannot make this one of the top 3 positions. In terms of reward, I believe that this company right now could give me one of the greatest returns. And when I consider what Bitcoin mining company has a strong foundation when it comes to renewable energy and profitability to where they can focus on growing hash rate, Cleanspark is definitely at the top of the list. Plus, they are significantly undervalued in my opinion. If you are bullish on Bitcoin, I really think Cleanspark could be a good option to put on your radar. In terms of what I'm doing, I'll add a little bit because Cleanspark is one of my largest holdings. The reality is that Bitcoin prices can fluctuate so much that it makes it difficult not only to project growth, but to really have strong margins for the next few years, especially if Bitcoin prices remain low. And those are my thoughts on Cleanspark. Hope you all enjoyed this video, and I'll see you in the next one.